Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Janice Warren, Senior Director of ESG Reporting Solutions at Nasdaq One Report. Janice, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Nice to be here.
All right, you got it. And let's talk about ESG investing. What is it? And more importantly, what is ESG investing?
ESG refers to three dimensions of corporate performance with the topics and metrics that cover policies, practices, risks, opportunities, and impacts throughout a company's supply chain. The E, of course, is environment, natural capital, resources, energy, water, soil, climate. Social is people or human and social capital, including diversity, equity, compensation issues. Governance is related to the board, legal, management structure, processes, and accountability, including compensation, management of environmental and social risks, and opportunities.
And Janice, what's driving the focus on ESG and ESG investment?
So initially, a lot of the drivers were values-based. There was a moral lens for evolving, with evolving norms going back to even the 18th century. And then there has been a modern day focus on responsible, ethical, or socially responsible investing, SRI, that was formalized during the 1960s, 70s, and 80s with debates about what's the responsibility of companies and investors related to product safety, environmental accidents or performance, and operating in countries that might be smaller than the company. Codes of conduct emerged to deal with those issues. And then there was a mainstream component that really represented an understanding of how little traditional financial metrics could explain a company's value. So used to be in 1975, intangible assets represented 83% of value. And today it explains less than 10%. So a lot of that explanation or understanding of value comes from ESG metrics. And there are a huge number of drivers that are part of this evolving landscape, including a large growth in the number of ESG funds and fund assets, really surging, particularly in the last 3 years. And in fact, global ESG assets are expected to reach $53 trillion by 2025, a third of assets under management. And there are leading investor voices focused on improving ESG performance and raising the bar on disclosure expectations. And I think there's some interesting survey work that's been done to really understand why analysts are focused on ESG. And the number one reason is managing investment risks. Number two, client investor demand. Fiduciary duty, which is interestingly being redefined, or a recognition of the importance of assessing risks and opportunities as part of that fiduciary duty. Firm reputation, improved returns, and ESG performance as a proxy for management quality.
Right, and that $53 trillion number, that is a big number in just a few short years. So why should companies prioritize ESG and ESG disclosure?
Of course, that number alone could give many companies motivation, but there are many external and internal benefits for prioritizing ESG. Attracting and retaining investors, top of the list. Improving employee retention, attraction, and engagement. If you think about aligning societal values and environmental imperatives and delivering on those values, those are things that make employees happy. They help with customers. Increasingly, we see RFPs requiring a minimum of ESG expectations, and consumers who are focusing on and requiring performance on ESG. Risk minimization. Low ESG scoring companies have a substantially higher risk of negative events and substantial share price drops. Build and retain reputation and trust. maintaining license to operate, and proactively addressing these rising disclosure expectations, whether they're voluntary or mandatory. And ultimately, we're talking about tapping good governance as a proxy for management quality. That's been a long truism in this arena. And I would say that I see ESG as a continuous improvement process and a recognition that no company operates in a vacuum. It's a learning process, identifying these metrics, goal setting, communicating on progress with investors, customers, employees, and stakeholders with candor, discipline, and purpose.
Right. And Janice, to wrap up here, given the proliferation of ESG ratings, frameworks, and disclosure expectations, how can companies navigate this fast-changing landscape?
It has been staggering, this proliferation. And I'd highlight a few of the types of raters and frameworks that companies should pay attention to. We have the research and ratings organizations, many with indexes. We have the awards, best of lists, worst of lists, voluntary frameworks, increasingly very public disclosure focused, with questionnaires or standards, codes, guidance, whether it's broad ESG or whether it's topic or industry focused, and meta frameworks. And then increasingly regulatory requirements around the world. Because Nasdaq One Report integrates a lot of these emerging topics from a broad range of these frameworks and raters, I really empathize with how daunting it can be to pay attention to them. A few tips. One is to monitor and leverage ESG frameworks and raters, tapping their expertise to identify the topics and metrics that may matter to a company and its stakeholders, not just investors, to inform those priorities and disclosure decisions. Next, consider a company's outward impact, not just material or relevant impacts on the company as you assess those risks and opportunities. Cross-reference multiple frameworks for efficient disclosure, SASB, TCFD, GRI, et cetera, and leverage your work with the commonalities that exist across these many frameworks for expected disclosures. And finally, ensuring that disclosure aligns. We often see cases of contradictory information in a regulatory or financial reporting versus a corporate responsibility report or business communications. And if you do the analysis and ESG work, it's important to both do the work and communicate it. Given the reliance on disclosure, it's better to talk about what you're doing than let your stakeholders set that narrative.
Right. Janice, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.